Crypto still might have a future. Here's how. For a while, it seemed like cryptocurrencies in general were unstoppable. The world had been taken over by crypto, people were becoming millionaires overnight just by investing in crypto. But 2022 has been one of the bleakest years in the history of this market. Whether it was Bitcoin crashing by over 26% or Luna crashing by a whopping 99%, the crypto market is not doing too well right now. People who had literally invested their life savings into cryptocurrency are now broke. Overall, they took a massive gamble and they lost. But what does this mean for the future of cryptocurrency? Why did so many people gamble their life savings on crypto? This video is going to tell you everything you need to know about the history of crypto, how it became such a popular investment technique, and why it might just be the future of gambling. Let's dive in. Why did crypto become so popular? The first real cryptocurrency, Bitcoin, was launched all the way back in 2009. It was a pretty novel but revolutionary idea. There was no central bank or central authority of any kind that issued this currency. It was all decentralized using a system known as the blockchain. There would be a limited supply, with no one having the authority to just print more Bitcoin. This meant that the more people who bought Bitcoin, the more the price of each individual Bitcoin would rise. It uses the basic economic principles of supply and demand. When supply is stagnant and demand keeps rising, the price of the product is going to rise. This was definitely true for Bitcoin as well. At first, you could get one Bitcoin for a fraction of a dollar, but in just a few years in 2013, one Bitcoin was worth over $100. This is because people kept buying Bitcoin as they heard more about it. To top it all off, anyone who actually bought Bitcoin back when it was worth just a few cents now had a lot more money. It didn't stop there. By 2017, the price of one Bitcoin had skyrocketed to over $1,000. Bitcoin was giving a greater return on investment than many of the top stocks on the New York Stock Exchange. At this point, people started to catch on to the fact that although the primary purpose of Bitcoin was to be a medium of exchange, its benefits didn't stop there. It was now an investment. A lot of people decided it would be a better idea to invest in Bitcoin and wait for the price to increase to sell it, sort of like what stock traders do. Of course, nothing's guaranteed in the crypto market. Unlike stocks, cryptos weren't really backed by any real performance. You see, the demand for a stock is more likely to rise when a company is performing well, has higher profits, or has big plans for the future. Of course, there's a risk to all of that, which is why we've seen stock market crashes in the past as well. But on average, the stock market has consistently grown by over 20% per year for the past 100 years. Stocks have intrinsic value. Owning a stock means you own a certain percentage of a company that does something, earns revenue, profits, and produces stuff. Crypto, on the other hand, was a bit different. You weren't investing in performance per se, but mere demand speculation. There was no real way to figure out how a cryptocurrency was performing. It's not like they had any sales figures or anything else like that to back up their value. The only indication investors could rely on was, well, demand. And how was that demand created? Pretty much at random. It was an extremely risky way of making investments, and it's the reason why cryptocurrencies are a lot more volatile than stocks. Of course, this worked for a lot of people. Many investors made millions, if not billions of dollars by just creating more and more demand. But this made the crypto market less like a stock market and more like a casino. People weren't making strategic decisions based on performance indicators. They were simply putting money into something that may or may not just skyrocket in value tomorrow for completely random reasons. The daily price fluctuations for cryptocurrencies were massive, and it was seemingly caused by nothing. Crypto investment had turned into a form of gambling. Just like in gambling, a lot of people gained a lot of money and lost a lot of money. However, the elements of the stock market were still there. Even gambling is done in a mostly controlled environment, but with crypto, it was like the Wild West. At the same time, there were certain cryptocurrencies that focused more on coming up with ways of having intrinsic value rather than just mere speculation. Among them were cryptos like Ethereum, Terra, and Solana. However, despite all of the real features all of these cryptos might have had, investors were doing only one thing with all of them: gambling. They were betting on whether or not their price would rise just like any other cryptocurrency. With all of that in mind, it was only a matter of time before something crazy would eventually happen. The crypto crash of 2022. 2021 was arguably the greatest year for crypto prices. Right in the very beginning of 2021, the prices of Bitcoin, Ethereum, and a bunch of other cryptocurrencies started to reach their absolute peaks. They started to reach prices that no one would have ever thought was possible before. Even though right around the middle of 2021 the prices did go down considerably, by November of 2021 they were reaching peaks once again. But 22 was a bit different. Prices were obviously low because of the selling sprees we saw in late 2021, but after the selling spree, prices didn't really improve by that much. There were a few glimmers of hope here and there. When the Russia-Ukraine war started, crypto prices actually saw a slight increase, but shortly after they started to decrease again. But eventually the crypto world started to feel the crunch of inflation as well. It's not exactly clear how inflation started to affect crypto prices, but it definitely did. The final blow came when the US Federal Reserve announced it would be hiking up interest rates by half a percentage point for the first time in 22 years. Within seconds of this announcement, over $200 billion in value was wiped off the crypto market. Bitcoin reached its lowest price in over 9 months, and is now expected to go even lower. Ethereum went below $2,000 for the first time in over a year, but Bitcoin and Ethereum got off rather lightly. The Luna cryptocurrency had been one of the top 5 cryptos by market cap for the past year. Right before the interest rate announcement, Luna had a price of around $86. This was lower than its peak of around $116, but it was still doing pretty well. However, right after the announcement, Luna's price crashed to around $2. A few days later, it had fallen below even 1 cent, and it was promptly taken off of every single crypto exchange you could think of. People had invested tens of billions into Luna, and it was all gone in the blink of an eye. With this, it became clear again that this isn't a market like the stock market, it's more of a gamble. The future of crypto. With the current crash, many people are worried that this is the end of cryptocurrencies as we know them. However, that's a bit of an extreme scenario. There's a very real chance that cryptocurrencies might not replace the fiat currency system we're all used to. After all, not many people expected crypto to do that in the first place. However, as far as the future of cryptocurrency as an investment is concerned, it's hardly the end of the world. Cryptos will continue to be highly volatile assets, which in turn means that people will continue to place big bets on crypto and try to earn money within that volatility. With that being said, we might not even see the peaks of Bitcoin or Ethereum ever again, because what happened with Luna has left a bad taste in the mouths of potential investors. It's going to take a long time for investors to become confident enough to take crypto seriously again. But if some sort of major advancement is made in cryptocurrencies like Ethereum, then there's still a chance for crypto to become something other than people to just gamble on. But we won't really know until that actually happens. Overall, cryptocurrency was meant to completely change the world. However, even as it performed well over the years, it failed to live up to people's expectations. Its technology wasn't able to keep up with speculation, and eventually it led to the massive crash. It's unlikely that this is going to end cryptocurrency altogether, but at the same time, it's also unlikely that this is going to be the final crash we see in the market. What happens next at this point is really anyone's guess. If you found this video helpful, be sure to subscribe to our YouTube channel for future videos. Tell us down in the comments what you think of the future of crypto. We'll see you in the next one.